Howdy for partnership resolution. We are in the second to the last part of our series for partnership. And it's partnership resolution. So partnership resolution is the changes in the account, in the equity composition of the partnership. So it's called resolution because as in this case, we have Cobilita and Quarantino, the original partners. Then the upcoming partner is Ulysses. So the original partnership of Cobilita and Quarantino is already dissolved. And they will have now Cobilita, Quarantino, and Ulysses partnership. So how do we account for the investment of the incoming partner as well as the changes in the equity of the existing partners if a new partner is to be admitted to the partnership? So, case 1, Ulysses paid Cobilita 250,000 for 50% of her interest. So, our problem here is admission of new partner 1 and 2, admission by purchase. So, Ulysses is to pay Cobilita for this much for a 50% interest. So Ulysses will be buying Cobilita, will be purchasing Cobilita's interest by paying directly to Cobilita. So take note, although Ulysses will be paying to Cobilita, the partners agree to admit Ulysses. Cobilita cannot just sell her interest to Ulysses without the consent of Quarantino. Because partnership is based on mutual agreement. So Cobilita cannot just sell her interest to Ulysses. So the partners must agree for the purchase of Cobilita's interest in the partnership. Okay? So Ulysses paid Cobilita 250,000 for 50% interest. So how do we account for that? So, if it's by purchase, whatever income or loss will be shouldered by the partner who's selling its interest. So, for the Cobilita will give up, Cobilita capital will give up 50% of its capital, and we will admit, it's Ulysses capital for 50% of her interest. So Cobilita's capital is 250. So Cobilita will give up 125 and we will transfer that to Ulysses capital. What happens to the 125 gain? So Ulysses paid 250, but Ulysses only get 125. What happens to the 25? It goes to Cobilita. Personal gain for Cobilita. Number 2. So, gain here is not recorded. Ulysses paid 120 for 50%. Again, the 50% of Cobilita is 125. But Ulysses only paid 120 for Cobilita. It's still Cobilita capital 125,000 and Ulysses capital 125,000. So regardless if it's gain on sale or loss on sale, the gain or loss is borne by the seller or the partner who's giving up its interest. 3. Ulysses invested 250,000 for a 1/4 interest in the partnership. So we will be learning two terminologies here. Two terminologies here. It's the agreed capital, which we will shorten as AC, and we have here contributed capital or CC. Agreed capital, this is the capital agreed by the partners to be credited to the incoming partner or to the existing partner. And contributed capital is the actual capital put in by each partners. So contributed, it's the actual, agreed, of course, the agreed capital by the partners. So case 3, 250,000 for a 1/4 interest. So we have here contributed capital, CC, contributed capital by Covidita, 250,000. Quarantino, 500,000. Prior to the admission of Ulysses, the existing partners has a total equity of 750,000. By the way, 1 and 2 is admission of a partner, of a new partner by purchase. 3, 4, and 5, admission of a new partner by investment. Invested. Okay, so admission by investment. Ulysses, joining the partnership, contributed 250,000. This is case number 3. So the total is 1 million. First column is the contributed capital. So, Covidita contributed 250, Quarantino contributed 500. Before the admission of Ulysses, they have 750. After the admission of Ulysses, the partnership now has 1 million total assets because of the 250 investment. Then we have agreed capital. This is what they contributed. The question is how much they agreed. Contributed capital and agreed capital must be equal. Okay. Based on their agreement, Ulysses is to receive 1/4 interest in the partnership. So 1/4 or 25% of 1 million is 250,000. So the change here is 0. Ulysses contributed 250,000 in the partnership for a 250,000 agreed capital. Contributed and agreed is the same, so no difference. That means no changes here also for the old partner. The incoming partner contribution is equal to its agreed capital, so no changes to both old and new partner. So that means this also will not change. Okay. Ulysses invested 250 and he was credited for 250. So our entry for number 3 is debit cash because he invested 250,000 and credit Ulysses capital. $250,000. Case 3 is the case where the incoming partner invested equal to the amount agreed by the partnership. Let's take case 4. Case 4, Ulysses invested 250,000 for a 30% interest. 30% interest. Okay, let's erase our answer here. This is now case 4. Again, the contributed capital is given in the problem, 250 and 500. The same thing, Ulysses here contributed 250,000, but this time, it is now agreed by the partners that Ulysses is to receive 30% interest in the partnership. So, 30% of 1 million is 300,000. Again, it is agreed by the partner for Ulysses to have 30% of the total equity. 30% of 1 million is 300,000. Ulysses contributed 250, but he is getting 300,000 as agreed by the partners. So that means Ulysses is gaining 50,000. So this 50,000 will be coming from the old partners, because if Ulysses is getting 30%, that means the remaining partner is only getting 70% of the partner's assets. Partner's assets as well as, of course, partner's equity. So 70% of 1 million is 700,000. So that means the old partner is being deducted 50,000 of their capital because it was given to the new partner. So in partnership dissolution, we call it bonus to the incoming partner. So this bonus will be coming from the old partners. This 50,000 will be divided based on the previous P&L or profit and loss ratio of the old partners, which is 3:2. So that means C will be getting 60% and 40%, or 3:2. Okay. So 60% of 50 is 30,000. So 8, Covidita will be deducted 30,000 and Quarantino will be deducted 20,000. So this 50,000 bonus to Ulysses will be coming from Covidita. 30% of that will be coming from Covidita. So that means Covidita's interest is 220,000, while Quarantino's agreed capital is 480,000. So 220 plus 480 is now 700,000. So this is a case where the incoming partner receives a bonus from the old partners. So our entry for number 4 is debit cash. Of course, still the company received 250,000. Ulysses received, so Ulysses capital, as agreed, will be receiving 300,000. So Ulysses received 300,000, and that is coming from Covidita. So Covidita will be debited for Covidita capital will be debited for 30,000, and Quarantino capital will be debited for 20,000. So our final entry is debit 250,000 for the cash received from Ulysses, 250,000, and this too will be debited for the bonus given to Ulysses to come up with the 300,000. And that's our answer for case 4. For case 5, Ulysses invested 250,000 for a 20% interest in the partnership. 20% interest. So I hope by this time you've already understood that the excess given to the old partner, to the new partner, will be coming from the old partners. So again, you will erase our answer. Let's clear this. Let's clear this portion. Okay. Again, for number 5, Ulysses again invested 250,000. The old partners invested 750,000. For this time, Ulysses will be receiving only 20% of the equity. So that means he will be receiving 200,000 as agreed. So Ulysses invested 250 for a credit of 200,000. That means he will be giving a bonus of 50,000 to the old partners. So this 50,000 now will go to the old partners as their bonus. So 30,000 positive will be given to Covidita. So it's 250 will become 280. 40% of 50,000, 20. So, Quarantino will receive 520 agreed capital. So, this is up. So, 1 million times 18%, because Ulysses will only be receiving 20%. So, 80% of 1 million is 800,000. So, it's balance. This is 50,000 positive. So, case 5 is a case where the old partners receive bonus from the incoming partner. The incoming partner. So our entry for number 5 would be debit cash 250,000 for the amount invested by Ulysses. Ulysses capital, he is getting 200,000. Since Cobidita and Quarantino receive bonus, so Cobidita capital will increase by 30,000 and Quarantino capital will increase by 20,000. Case 5 is a case where bonus is given to the old or existing partners. Debit cash, credit, capital.